All right, team, we're here. We got the FOMC Minutes report going live in about 50 minutes. We'll put a timer up. Let me get the bottom here. Markets are at all-time highs. Gold at all-time highs. NASDAQ at all-time highs. SPY at all-time highs. NASDAQ sitting at 25,250. 25,276. 25 is the new all-time highs on the NASDAQ. New all-time highs in gold are 4,081. SPY ripping up. All-time highs on it are 673 from yesterday's opening bell. We're at 672.60 or so right now. Tapped 673s this morning, but didn't quite break the all-time highs in the SPY. Oh man, we're here. FOMC report goes live in 50 minutes. We'll put a timer up. Bitcoin currently sitting at 123.5 still. Bitcoin running up. I don't know. I think since we don't have any economic data. Yes, this is live. Since we don't have any economic data, people might be paying more attention to this FOMC Minutes report. And then tomorrow we got Jerome Powell speaking, although it is just opening remarks. We'll see how that goes. We're supposed to have jobless claims tomorrow as well, but again, the government's still shut down. Yeah, this is the FOMC Minutes report. Gold still ramping up here at 4,081 right now. And if we take a look at the odds for rates ahead of the meeting so far, we are at about 95 to 5% likelihood of a rate cut later this month in October. About 95% chance. This has gone down, I think, a little bit, but it's about 95%. 5% chance of a pause in October. So we will see. Hey, what's up, CT? Yeah, man. I got nothing but time on my hands. Again, I tore my MCL, my meniscus. I'm in this big boot and knee brace. It doesn't feel good. I'm stuck at home. We're definitely covering the FOMC minutes because, yeah, I'm stuck it up. Look at yields this morning. Yields up a little bit. They were at like 4.1% earlier this morning. They've mostly gone up this morning here. You can kind of see it. But, they're actually about break even on the day here where we started the day, so we're right around break even. I mean, generally this report can be mixed. It can be really impactful or it can be kind of quiet. I think since we don't have any economic data from the federal government to curve us in either direction, I think this report might be more relevant than normal just because we don't have any economic data. Brother, at some point, do you think big crush? What do you mean by big crush? You mean crash? I don't know. Maybe. It's hard to tell. People are worried about overvaluations in AI technology. But if you look at it, we've had a lot of little mini corrections. Yeah, let me get a timer up. What do we got? We got... $25 minutes. Let's do a poll here. Are you bullish or bearish on today's FOMC Minutes report? Vote on the poll. The poll's now live. Let me know what you guys think. Bull or bear today. But yeah, looking at history of crashes, I mean, it's hard to tell. All right, NASDAQ still heading back up. Again, we're breaking all-time highs. SPY at all-time highs. Gold at all-time highs. And again, in some ways, I think we do mirror the 2000 crash right now. Almost every major market crash has been preceded by smaller warning pullbacks or mini crashes that look like regular corrections at the time. The pattern is kind of shock, bounce, breakdown. And so volatility spikes or sharp corrections months before the real crash were often dismissed as healthy pullbacks historically. We recover partially, convincing investors that the worst is over. But then some of them fail to make new highs. That's not what we're doing here. We actually did make new highs. It happened before the dot-com crash, 2008 and 2020. Yeah, so in summer of 1998, we had the LTCM crisis and Russian default. And so the S&P fell almost 20% in 1998. But by 1999, the market recovered and hit new highs. And so sentiment turned euphoric again. The big crash started in March 2000 and lasted until 2002 with a loss of almost 50%, 49% total. So 18 months before the real crash, .com in 2000, the market had already given some warning signs. In 2008, we saw S&P down 7% in 2007 of February. Summer 2007, Bear Stearns hedge fund collapsed another 10% dip. Markets rebounded to new highs though by October, but then started the true bear market, which intensified after Lehman failed. So we got some similarities for sure. And again, we're heading into this report like we've seen really weak labor. We've seen really weak labor signs. We've seen really weak payroll numbers. JOLTS was weak, I think. Non-farm payrolls were weak. We've seen a lot of revisions. They revised payrolls down a ton. The benchmark revision was revised down. And so the payroll numbers have been weak over the last few months. A lot of people are fearful that we are now heading into a recession because of those weak payroll numbers. And the Fed is too late to act, they say. I don't know if that's true or not. Since we're not really getting any data, I think it becomes pretty probable that we are going to be, since we're not getting any data, it becomes pretty probable that we're going to cut rates next month. Again, since we're not getting any data. Now, what that means, I don't know, but I think it becomes likely. We already have basically a 95% chance of a pause, or of a cut, I mean. So. And at this point, we are heading into a point where markets think we're overvalued. I've seen a lot of news over the last couple months about overvaluation in markets. Yeah, the FOMC minutes can drop the price of gold. It just depends. It's hard to pin gold right now. It's breaking all-time highs, and so is the S&P 500. And historically, these can kind of trend against each other, but it just depends on the context. Like right now, S&P, NASDAQ, gold, all breaking all-time highs. And so with that, it's kind of hard to figure out where gold's going to go. A lot of it's pending on rates, and I think it's pretty probable we cut rates another 25 basis points later this month, and as well as in December. At this point in time, if we're talking about the federal government shutdown, federal government is shut down. At this point, almost half of people think it's going to last over 25 days. 46% think it's going to last more than 25 days. 59% think it's going to last more than 20. And this is day 8 of the government shutdown. So Yeah, Bitcoin is not quite at all-time highs, but it broke them over the weekend. Yeah, Bitcoin is pushing up actually right now. Still got a little ways to go, but it's getting back up there. How you guys doing? You guys red or green and all this stuff going on? Green. Dollar index has been moving up and all this stuff as well here. The dollar index has been moving up. It's up to 99. Dollar index has basically been moving up most of October. All right, guys, we got 40 minutes left. 40 minutes until the FOMC Minutes report is released. And again, the government was supposed to meet today again at 11, I believe, this morning. So as of the last few updates, the U.S. Senate rejects Democrat government funding bill, voting next on Republican stopgap funding bill. But the Republican bill to end U.S. government shutdown failing to win enough votes to pass in the Senate, so voting is continuing. No deal yet. Again, in today's FOMC Minutes report, which is a detailed breakdown of the last FOMC meeting, in this report, we are going to be looking at a couple different things that are relevant. One of those things is going to be rate cut timing. Market expects rate cuts again in October. Any signal on when November, December will move yields fast, or October or December. You want to pay attention to inflation language. Progressing, persistent, or unanchored inflation expectations can cause spikes. So listen for maybe how it's progressing, persistent, unanchored, how confident the Fed is in inflation returning to 2%. This is a little bit too quiet of a song. Yeah, Bitcoin is pumping right now. Look at Bitcoin. I'll put it up. And again, so just to put this into perspective, right? Every 6 weeks, the Fed makes a decision on interest rates. They're controlling short-term interest rates, and then eventually these short-term rates trickle into everything else, right? They directly affect home equity lines of credit, mortgages, adjustable rate loans and mortgages, which these are the rates that can get adjusted in some of these loans. And the Fed's job is to maintain balance. If inflation is bad, or they can raise rates or keep rates high at restrictive levels, and this pushes the economy down, pushes spending down, lets inflation decrease. If we're headed towards a recession or in a recession, they can bring rates down to almost zero. And the logic of they can lower interest rates. And the logic of this is that when interest rates are cheaper, businesses can expand more. You know, they have cheaper interest, and so they can expand more. People tend to spend more. It stimulates the economy in that context. They can do more desperate things called QE and QT, quantitative easing, which is money printing, creating online bank reserves, and then using that to buy up bonds and other financial assets. Injecting liquidity helps bring interest rates down quick. But the consequence of all that stuff is inflation. And right now, the federal government is closed in terms of economic releases. So we're not getting jobless claims weekly, which is a real-time look at unemployment data. How many people are filing for unemployment is what jobless claims are. We're not getting that weekly like we used to when the government wasn't shut down. We also didn't get the payroll report last Friday. It's supposed to drop last Friday. It's now Tuesday of the next week, and we still don't have a payroll report. And so the Federal Reserve doesn't have this data to steer them. Also, we just got news that the U.S. Senate rejects the Republican government funding bill, and that there's now no clear path to end the shutdown. So they didn't get a deal done today. They were supposed to meet at 11. No deal done yet. We'll see. The shutdown is over when they can come to an agreement here on a bill or on government funding. So every year before September 30th, the federal government, both sides have to agree on funding for the federal government employees. And right now there's a stalemate. They never agreed. And so October 1st came and went, and now the government's officially shut down. The Senate failed to advance rival funding bills today. Negotiations are going to continue. The Republicans proposed a short-term funding extension through November 21st, and the Democrats repeatedly blocked the plan, insisting on a bill that includes the extension of Affordable Care Act subsidies. Neither side wants to give, and now basically they're having to furlough federal employees. That's why we don't have economic data coming out. All right, we're at 25,263 here. Gold at 4,073. NASDAQ still at all-time highs, broke all-time highs multiple times. The SPY is pretty close. All-time highs on the SPY, 673.10. We're at 672.90. We're 20 cents away from all-time highs on the SPY. Very, very close. Bitcoin pushing up. Gold at 4,080. Well over 4,000. A lot of people are talking about 4,100. So no deals done yet. Again, the FOMC minutes due in about 30 minutes, 31 minutes to be exact. It's not going to incorporate info since the meeting, though, like the government shutdown or lack of data. There will be eyed to see views of rate path, FOMC, and what the split is like on who is more concerned about the labor side of the mandate or the inflation side. Chair Powell also highlighted that the support for the reduction was broad but not unanimous, and almost everyone supported the cut last meeting, showing a high degree of unity of acting cautiously. The dot plots show a wide range of views on rates. Moran also admitted he is the most dovish 2025 dot, although one participant sees rates higher than the current level. Meanwhile, 6% participants see no more rate cuts this year, 9 see 2 more rate cuts, and 2 see 1 more rate cut. Meanwhile, estimates of the neutral path. So most people are expecting 3 cuts this year. 1 last meeting, 1 later this month, and then 1 in December is what it's projected to be as of the last FOMC meeting. Last time, again, they cut rates 25 basis points. Bowman and Waller joined the consensus calling for a 25 reduction. Moran dissented, wanting a 50 cut. Updated projections show 9 of 19 officials see 2 additional cuts in 2025. So, yeah, that's where we're at. NASDAQ still getting close to all-time highs. We're at 270s right now. Again, we're still doing quantitative tightening, which is a hawkish thing. Gold going up. Yeah, Bitcoin edging higher. So look at where Bitcoin should be. Bitcoin spot currently at what did I do with it? I got too many windows up here. Oh, here it is. Yeah, Bitcoin spot up to 124. All-time highs on Bitcoin though were what, yesterday? Yeah, all-time highs on Bitcoin looks like are 126.3 or so. A little bit over 126. We're at 124, so we still got a couple thousand. Gold now dipping down under 40,075. Yeah, so the Senate tried to reconvene, but I don't think they got a deal done. What is this right here? Meta's still pushing up. Bitcoin's still pushing up. Looking at our poll numbers, we asked people, are you bullish or bearish on the FOMC Minutes report? 63% said bull, 37% said bear. We still got 30 minutes until this report. Remember, we got Jerome Powell speaking tomorrow as well. So we do have Jerome Powell speaking tomorrow. But as of now, government's still shut down. We don't know when it's going to end. Traders going wild. Yeah, they didn't work out a deal. Government stays shut down as of today. So I was hoping they would get it done. I wasn't confident. I told you guys this morning, I wasn't confident they'd get the deal done. But that's how it goes. Senate rejected the Republican government funding bill, so didn't pass in the Senate. And Senate also rejected the Democrat government funding bill, so both sides rejected each other, basically. I doubt he's going to pause. I mean, look, we'll see. You know, you never really know. I doubt he's going to pause rates. That would be going against the expectation as well as kind of against the labor data. I think if we don't have data to guide the Fed, I think the Fed is more likely to just go business as usual, keep it easy. Do me a favor, hit that like button, hit the subscribe button on the channel. We appreciate it. All right, we're at 266. The NASDAQ looked like it wants to break highs. I might buy this dip ahead of this meeting. We already got a cushion on the day. We might as well, I think. If the NASDAQ breaks some highs ahead of this. We got a cushion on the day. Might add one or two more. Just because we're so close to all-time highs on the NQ, I would assume we at least jump up there and tap it. But you also can sometimes get big drops, so I just got to be careful. All right, guys, we got 25 minutes left here. At least we got the Fed Minutes report today. All the economic data is closed. So yeah, we'll see. Bitcoin just hit 124,000. Yeah, so I'm down a little bit. I'll probably end up cutting this and just waiting now. Dip's a little bit too large for me. Lagging a little bit on top step too, so I might cut this and just wait now. Still up hundreds on the day. Nah, I'm not gonna hold it again. I'm just taking small risk. I'm not gonna get back the profit I had on the day. Watch the market tank when they come to an agreement. Yeah, I mean, a lot of the time, historically, governments are buy the rumor, sell the news events, where we end up going up after the shutdown starts and down ahead of it. So preceding it, we go down, and then after the shutdown starts, we go up. Generally, not always. Again, we got 25 minutes left, though, until this report, so we still got some time. We're going to use AI to interpret all of it and break it all down for you so you can kind of understand it. But, yeah, 22 minutes here. Yeah, I think we'll probably tap. It's just not worth the risk. And again, I think we might tap this and then dump down here. I don't know if we're going to hold ahead of the FOMC Minutes report. Maybe we do. But, again, for me, it's just not worth the risk. I'd rather just wait and maybe mess around on... Yeah, no deal done for the government. They met earlier this morning at 11 a.m. No deal done, unfortunately. Yeah, help me break 100 likes. We got like almost 100. Should have maybe bought the dip in gold. Yeah, we got so close to the all-time highs. Let's see if we actually hold up there. Got close. Now we're kind of correcting down. Yeah, the French government right now is kind of messed up. They recently got a new government in. I don't remember how long ago, and they essentially got it's a lot of unknowns about French government. All right, let's see if market pushes up to test this all-time high level. How long until the end of the day? So right now it's what, 1:40. Still got 20 minutes until the FOMC minutes. Dropping gold, possibly what caused the recent move. Yeah. I mean, eventually we're gonna not keep breaking highs. We've been breaking highs for so long now. But who knows when this is gonna stop. Look at the market might just be muted ahead of the FOMC Minutes report. It just might not know what it's gonna do. Low retirement age. Yeah. Five finally starting to dip down. The NASDAQ's popping back up. So this is not an FOMC meeting. This is an FOMC Minutes report. I put it at the bottom. It's a detailed breakdown of what happened last time in the FOMC decision. Last time they cut rates 25 basis points. It was the first cut since December of last year. And so that's kind of what's going on. First cut since December of last year. And this is kind of the breakdown of that report, so to speak. Gold bouncing higher, back up to 4,070s. Yeah, I mean, I'm definitely cautious right now in buying up stuff. I mean, I still bought some stuff. I bought Home Depot yesterday. I'm down a little bit on it, but it's not a huge position. I bought Hims a few days ago. I bought PayPal, SoFi, Target. I'm green on most of these. Right now, the market's sitting right around all-time highs. And so what I'm waiting for is to see how the market interprets this FOMC Minutes report. And again, we're going to break it all down live as it happens. Yeah, I'm pretty sure the FOMC Minutes report. Federal Reserve. Yeah, I mean, the Federal Reserve is independent, so yeah, it's coming out. Okay. We'll see when the government resumes when we're going to get the data, but... FOMC Minutes reports at 2 p.m. Eastern Standard Time. So we got 17, 20, about 20 minutes, a little bit under 20 minutes. NASDAQ's popping up, looks good. I'll show you this trade I'm in currently. Hold on, let me find it. Yeah, so I bought a little bit of the NASDAQ here. A little choppy, and I'm worried we're going to keep getting choppiness, so I'll probably kind of be tight on the rest of this. Candlesticks are kind of quiet. I don't know about selling gold. I mean, gold's around all-time highs. I don't know. Depends on how long you're holding it, to be honest. Gold can downtrend or uptrend for a long time, and so it really just depends on how long you're holding it. Alright, so I guess we'll cut this. It's small. I wanted to give it a second, but I think it might just be going up and down, sideways. $15 minutes. Bitcoin's still pushing back up here. Again, do y'all think gold will break 40? Do y'all think gold will break 5,000 this year? A lot of people think it will. I don't know about that. I mean, it's high. If it does, I think it's going to be sometime soon. But a lot of people are looking at 5,000 for gold now, which again, I just don't know. Gold's still pushing back up. Still 15 minutes before the report. We're going to use AI to break this entire report down, though, so you'll be able to see all of it. Gold stays bullish most of the time, I think. I mean, look at the daily chart. Yeah. I mean, gold, the problem with gold is that gold will stay bullish most of the time, but when it downtrends, it can downtrend for a decade. And so it's not one of those things that's always going to go up. It's just not. Sometimes it's going to downtrend for long periods of time. Historically, that's how it behaves. You know, it's just how gold behaves. Now, we might still be on an uptrend. We might be pushing for 5,000. 4,000 was that big milestone level. Wait, gold went through 4,000 like nothing. Yeah, it's almost to 4,001 now. 4,100. And I think that's what a lot of people, that's the next big level I think people are watching, is this level right here, this 4,100 area. This level right here. All right, here goes the NASDAQ testing these high levels. Big rip on the NASDAQ. Still close to these all-time highs. Here goes the NASDAQ push for all-time highs. We got about 12 minutes left. Hit the live button next to the play button. Make sure you're fully caught up on stream so you can catch the FOMC Minutes report as soon as it comes out. And let's see if the market breaks all-time highs ahead of this report. Here's all-time highs right here. I think we should watch 275 as a psychological level. And remember, the FOMC Minutes report is just going to break down what happened in the last FOMC meeting. Maybe give us some outlook into what we might potentially get moving forward here. So, again, hit the subscribe button, hit the notification bell. We appreciate it. Here's all-time highs. So you just tap that 475 level. So NASDAQ just broke all-time highs. Tapped 470. Tapped 275. The 275 hold. Whoa, huge rip. Look at this. Big pop over all-time highs just now. That was a big move. Make sure nothing went on. That was a pop right there. Over all-time highs. I think Bitcoin's getting close too. Let's see if we hold 275 as support. Again, FOMC Minutes report at about 10 minutes here, chat. 10 minutes. Yeah, Bitcoin is ripping up towards all-time highs ahead of this report. If we hold SPY up at all-time highs as well. SPY all-time highs is just above this level. I think it's 673.10. Let me see. 673.10. How did this not count as one though? Oh, it just tapped it. Okay. Gold rebounding back up towards all-time highs as well. Again, guys, we got about 9 minutes left. Hit the live button next to the play button. Make sure you're fully caught up on the stream. We appreciate it. See what happens here. Your thoughts on the FOMC before it drops? Yeah, I think a lot of people are going to be paying attention to this report, maybe a little bit more than normal, just because we don't have any economic data coming out, right? So we have no economic data to look at to guide the Federal Reserve's path at this point in time. And so with no economic data, the question is really going to be, what is this? What do we do next meeting with no economic data? I think we're probably going to cut rates 25 basis points. I think we're just going to go business as usual, personally. I think we're just going to cut 25 basis points. Go business as usual. And not really going to... A lot of people think because we don't have data that maybe we're going to pause or whatever. I don't think that's going to happen. Personally, I might be wrong. Again, I told you guys in the last meeting, I think we're going to do 25, 25, 25. So I think we're going to do 25... 25 last month, 25 this month, and then 25 in December, basis points wise. All right, NASDAQ broke all-time highs, and now it's flushing back down under these previous levels here. I don't know. I'm going to leave this bullish or bearish on the FOMC Minutes report one live. We got 7 minutes here, chat. Hit the live button. Put it in 2x speed. You'll never get delayed on the stream if you put it in 2x speed and you hit live. At least you shouldn't. Even if you're lagging on your end, it should keep up. Yeah, the last ADP report was weak. Negative 35,000 or whatever. It was weak. It wasn't good. And again, that's the only data. ADP is a private provider of data versus the federal government. So, yeah. Well, we're not going to cut next week because we don't have the FOMC meeting next week. The FOMC meeting is in 3 weeks from now. At the very end of this month, on the 29th, I believe, is when the next FOMC meeting. It's always on a Wednesday, so I'm pretty sure it's going to be on the 29th. But yeah, we're not cutting next week. We would have had CPI inflation data if the government wasn't closed. So if the government wasn't closed, we'd have CPI inflation data. But since the government's closed, we don't have the government entity to release the data because workers are furloughed. This is why, again, I said this 1,000 times. What I don't understand is, okay, so if non-essential workers are the ones furloughed, how is this data release not essential? Like, you can't keep one person on in each of these departments to be like, here's the data. Especially payrolls last week. That data should already be there. They got to just click send. You know, like, y'all can't get somebody to do that. What's the problem here? Fed? Government? You know, that's my issue. Like, I would assume the data is essential for guiding the Federal Reserve and the economy. And so if we are shut down and it's only 40% of workers, the 60% left can't get it done. That's my problem with all of this. Probably, yeah. Once we're back, all of these reports will probably just drop. They'll just start. Again, I don't think it's going to be something where we're back. I don't think it's going to be something where it's like, okay, we're back. All the data is just going to come out as soon as the government resumes. It's going to be something more so where the government resumes, and because of that, you know, they're going to reschedule the data for this specific day, right? And we're probably just going to get all the data at once, like all the payroll data at once. And so they're going to schedule them, but it's going to be organized when it comes back. It's not just going to be data. At least I hope not. You know, I hope not. If the data all just gets released at once, it'll be genuine chaos. I hope they don't do that. Hey, what's up, Bulldog? How you doing, brother? Hope you're doing good, man. It doesn't matter about the data? Maybe not. I don't know. Again, selfishly, I want them to resume the government just so I can cover the economic reports, because that's like my big thing for my channel is economic reports. And now we don't get any because the government's shut down. Make a deal, guys. Come on now. I'm going to get a sign out here and just walk around, protest it. Yeah, Bitcoin's flying up right now. At least the last time I checked it was. Yeah, it's at 124.78 from Bitcoin futures, 124s for Bitcoin. So it's doing things. 4 minutes here, chat. Yeah, AMD's been going wild. I told you guys earlier it'd probably break all-time highs. It got up to 232s right now for AMD. Look at AMD here. 232s. It's up there. All right, guys, 4 minutes. You really trust the data you're given? I'm not saying the data is accurate, okay? It's really not accurate, especially payrolls are not accurate at all. They've been revised over and over and over again. I'm not saying that. What I'm saying is that I trust the revisions a little bit more. The revisions are a little bit healthier and to interpret versus the, you know, it depends on which survey. Some of them are pretty accurate. Some of them are not accurate at all. So it depends on which data we're talking about. Inflation data is generally pretty accurate. Yeah, and outside of all of it, they move markets, right? Like they're moving markets here. Yeah, the minutes coming out. Again, we are going to interpret this as soon as it drops. All right, guys, we got 2.5 minutes. Again, hit the live button, put it in 2x speed, and you'll catch up to the stream here. What about gold? What about gold? Gold's at all-time highs. It broke over 4,000, a big psychological level. It's at 4,072s right now, close to 4,100. The next big level people are questioning is 5,000, whether we're going to hit 5,000 anytime soon. Yeah, I mean, it's gold. It's going up lately with the uncertainty of everything, the government shutdown. All right, guys, you guys ready? FOMC Minutes report coming soon here. Oh, let's see what we get. All right, guys, here we go. We got about a minute left. About a minute left. All right, guys, 50 seconds. The last FOMC meeting. All right, guys, we're here. And the report goes live in about 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on the stream here, chat. Timer's a little bit early. And here's the report. 10 seconds. Hit the live button next to the play button. Put it in 2x speed. All right, guys, we're going to break all of this down as soon as it drops. So stay with me here. And here's the report right now. All right, NASDAQ ended up ripping up over all-time highs since this report came out. Again, we're breaking it down using AI. We're breaking it down using AI. All right, so NASDAQ originally reacted positive to this. All right, so here's the report. We have the report right here. I'm going to use AI to break it down. Give me a second. All right, so here's the report of 9/17/2025 FOMC Minutes report. So this is from the last Fed meeting that happened 9/17. NASDAQ is reacting negatively. We're down to 266. Just the initial cliff notes of this report. All right, so outlook. We're going to put outlook first here. The committee observed that inflation has risen since the start of the year and remains somewhat above 2% longer run goals. They noted that generally expected that given monetary policy, inflation would be somewhat elevated in the near term before gradually returning to target. The tariff effects are in one of the first dynamics. Participants generally assess that this year's tariff increases had put upward pressure on inflation. Business contacts indicated that they expected to raise prices over time due to these higher input costs, with more participants expecting the tariff effects to be fully realized by the end of next year. A few participants argued that inflation, excluding the effects of the tariff increases, would be near the target. Deflationary factors, so the labor market is not expected to be a source of inflationary pressure, which can sometimes happen, and continued productivity gains are seen by some as a factor to likely reduce price pressures. Participants stressed the central role's monetary policy is ensuring long-run inflation expectations, which currently remain well anchored, continue to be so to aid the return of 2%. The majority of participants emphasized upside risk to inflation. These risks include inflation readings moving further from 2%, persistent uncertainty about the full impacts of tariffs, and the possibility of elevated inflation proving more persistent than currently expected. Most judged it would be likely to appropriate to ease policy further over the rest of the year. Some noted financial conditions suggested policy may not be particularly restrictive. However, some participants noted that they perceived less upside risk to their outlooks than earlier in the year. So, less risk to inflation than earlier in the year is probably going to be seen as a positive thing in these reports here. Again, you also have to understand, like, we're breaking this down using AI. So, the general consensus was for moderate economic growth, slowing from the pace observed in the previous year. So, they see the economy slowing a little bit. Participants agree that job gains slowed and the unemployment rate edged up, suggesting a softening in the labor market reflected declines in both labor supply due to low net immigration and changes in labor force participation and labor demand due to moderated economic growth and high firm uncertainty. The majority felt recent indicators did not show a sharp deterioration. A few noted that revisions in prelim data suggested the softening had begun earlier than previously recognized. And so again, the general consensus for outlook in the economy is that moderate economic growth slowing from the pace observed earlier in the year. In terms of developments in financial markets interpreted recent data releases and FOMC communications as confirming that while the economic baseline remained unchanged, downside risk to the labor market increased. Near-term expectations for policy moved lower in response to weaker employment data. Almost all respondents to the desk surveyed expected 25 cut at this meeting. The vast majority expected at least 2 cuts by the end of the year, with roughly half anticipating 3 cuts. So half of them think we're going to get 3, at least. Majority expected at least 2. Treasury yields fell from 20 to 40 basis points over the intermeeting period. The largest decline occurred at the short end of the yield curve, which caused the curve to steepen. Staff models indicated that nearly all the decline in short-term rates was attributed to the shift in policy expectation. They expect the policy rate in 2027 and beyond were largely unchanged. Downside revisions to near-term expectations were viewed as accelerating the rate's return to its longer-run level. And the committee maintained its previously framework for reducing the size of its security holdings. The cap for rolling over, this is quantitative tightening is what they're talking about. The cap for rolling over principal payments from maturing treasury securities was kept at $5 billion per month. The cap for MBS is $35 billion per month. So they reduced treasuries quantitative tightening down 80% like 5 months ago, 6 months ago. But they didn't reduce the cap on MBSs, so mortgages. And again, if you want mortgage rates to come down, this might be something in which ending quantitative tightening on MBSs might help. So anyways, NASDAQ is testing all-time highs. Again, what I see from this report is they see more weakness in the labor market. Inflation expectations are a little bit more anchored now, I think. So again, inflation expectations a little bit more anchored. Look at this drop here, though. We are seeing some drops. And so just to quickly summarize it again, they cut 25 basis points. Inflation remains somewhat elevated while tariffs are the primary driver. They expect these effects to fade by late next year. Majority of participants sees upside risk to inflation still, though, citing the stickiness of current readings and continued tariff uncertainty. Job growth has slowed due to both reduced labor supply, lower immigration, and moderated demand. Most members do not see a sharp deterioration in labor yet. And the committee is not on a preset course. Further rate adjustments will depend on incoming data, which we do not have right now because of the government shutdown, the evolving outlook, and the balance of risks. The shutdown has made the minutes more critical. Key reports like jobs and retail sales, CPI data next week is not going to be coming out now because of this FOMC, or because of this government shutdown. So, yeah, I'll put this up on screen if you guys want to check it out. What do you guys think? Is this dovish or hawkish right now? Let me do a report here. Is this dovish or hawkish right now? Dovish or hawkish meaning? Let me do a poll. I'll ask people here. All right, guys, we're gonna do a poll right now. NASDAQ is still right around all-time highs. I vote on the poll. The poll is now live. There's the poll. Again, it is now live. Let me know what you guys think. All right, so again, just to summarize it, it says most participants judged it would be likely or appropriate to ease policy further. Some participants noted financial conditions may not be particularly restrictive. Those participants judged a cautious approach. Almost all participants supported the 25 basis point cut last meeting. Downside risks to employment increase. Upside risk to inflation had either diminished or not increased. So again, I think this is a pretty dovish report. Inflation fears have kind of settled a little bit more. They don't think it's going to be as bad as they thought. Labor market was weak, justifying rate cuts. We don't have economic reports coming out, and so we got to go with the previous data, which is what they just went over here. So I think it's probably safe to assume at least that they're going to cut 25 basis points later this month, especially if the government doesn't resume, because we're going to stick with this this outlook. So honestly, we got 600 votes already. We're very split down the middle here on this report. Very split down the middle here. NASDAQ's testing all-time highs again right now, though. Look at this NASDAQ push. Yeah, interesting. NASDAQ at 285, around all-time highs again. Just to clarify all this again, guys. Just to clarify all this again, they essentially see downside risk to employment increase, so labor weakness is there for sure. Upside risk to inflation diminished, not increased meeting to meeting, which is going to be seen as an optimistic good thing if you want rate cuts. NASDAQ is kind of reacting positively to this report. The report showed up right here. And again, give me a follow, x.com @beginnertrades. We cover all this stuff live. We cover bullet points, all the stuff that you want to see from this report. We cover it. Give me a follow @beginnertrades. BEGINNERTRADES. Beginner Trades. Give me a follow. We appreciate it. It also says here that one participant preferred a 0.5 percentage point rate cut. That was Moran, 100%. That was Moran. Moran's the new guy, you know. And so he wants 50 basis point cut. I'm not even saying he's wrong. You could probably argue just rip the band-aid off and cut 50 and then maybe skip a meeting or something like that. I don't know. Do you guys think it would be appropriate to cut 50 last meeting and then skip October rate cuts and pause in October and then cut again in December? Or do you think 25, 25, 25, which is what I personally, again, I said this last meeting, I think that's what they're going to do. I still think that's what they're going to, I think they're going to do 25, 25, 25. But what do you guys think is the best and most appropriate? Well, stagflation is there, right? What I'm saying is that, again, I've said this for the last, I think rate cuts are bullish right now. And I think the market wants rate cuts. And maybe after we actually do cut rates aggressively, maybe the market starts to head down. But I think this report is a dovish report. I'm not even saying bullish. I'm saying, is this hawkish or dovish? I think it's dovish. I think, again, if people are noticing that the downside risk to inflation, or the upside risk to inflation diminished or didn't go up, that's a good thing. That's a good thing if you want rate cuts. I think inflation not going up is optimistic. You know, labor market getting weak is not the most optimistic, but I think if you want rate cuts, it is. And so, look at AMD, guys. Bro, I don't need Chat GPT to repeat this, bro. I could tell you about all this stuff. Come on now. Oh, don't get mad because your channel's small or whatever. Don't be butthurt, man. Come on now. You'll be all right. Cry about it. NASDAQ up to 287s here, 288s. SPY about to break highs again. We'll see if it does. Anybody that watches the stream knows I understand Federal Reserve and what they're doing, and I've been right about every single decision they've made. Everybody's telling me that they were going to pause last meeting or cut 50 basis points, and they've been wrong every time. You know, I'm not saying I'm the top 3 greatest analysts, but I'm definitely top 4, I think. Yeah, I think the stagflation argument's probably there. I think we are in a little bit of a stagflation environment. I don't think inflation is necessarily low, and I think labor's definitely weak right now. We're seeing signs of it. Are we in full-blown stagflation preceding a recessions type of environment? I don't know. But I do think we see signs of it. I think we see labor weakness, big revisions. We see some of the largest revisions in a long time to the labor reports. Every single one of them lately has been weak. ADP was weak. Payrolls were weak. Unemployment ticked up a little bit. I don't necessarily think the labor market's looking good right now. And I think we also have signs of high inflation. But I think at a certain point, sometimes stagflation can precede a recession. I think at a certain point, the risk to the labor market can be more profound, just because you got to think of it in terms of, if we do enter a recession, what's the Federal Reserve going to do? They're going to print a bunch of money again. They're going to do quantitative easing. That's going to make inflation spike up much more. And so I think at a certain point, once you hit a certain point, the risks to the labor market are the most profound risks. Inflation's kind of normal, but it all depends. I'm not saying it doesn't spike, but I don't want to see us do quantitative easing. And I think the easiest way for the Fed to do quantitative easing is for us to enter a recession, which starts with weak labor. And I don't want that, you know. And so I think if we want to avoid that, we have to cut interest rates. Personally, that's what I think, right? Maybe I'm wrong. Let me know if you would disagree with me. I'm sure you will. Keep doing what you're doing, bro. Thank you, man. I appreciate it. John, you're the greatest. Top 4, I think. Yeah, Chat GPT, you don't know what it's going to tell you. I can tell Chat GPT, hey, I can fly with my Nikes on. And it's going to say, oh, you're right. I apologize. You can fly with your Nikes on, you know. I mean, like, actually fly, not in an airplane, you know. The Chat GPT is just agreeing. That's one of the biggest yes men in the world, Chat GPT. Gemini's better, but... I think we cut. I mean, I think we cut last meeting. We cut later this month. We cut in December. That's what I think. 25, 25, 25 is what I think. If you take a look at yields here from this report, you can kind of see where interest rate sentiment is going. I would assume yields are down from this report, but sometimes yields move in weird ways. And yields are basically flat from this report so far. Yields are up today, though. Here's yields. Yields and interest rates follow each other. No, it's rate cut last month, rate cut at the end of this month, rate cut in December. Did I say November? I meant December. I disagree. Jobs down because of immigration, and people always play down inflation until they're $12 eggs. Job market is bad, but not burning. Hey, listen, you might be right. Again, that's why I think small 25 basis point cuts are fine. You know, I think 25 is fine. And 25 is not a large cut. It's very small. You know, 75% or 75 basis points, you know, 0.75% by the end of this year. I don't think that's the craziest cut. And I think we could do that and also be data dependent moving into next year. And that's a reasonable risk management in terms of not spiking inflation, but also being proactive with labor. But I'm sure some people would disagree, and that's okay. Yeah, AI needs me right now. AI is asking me to answer questions, you know. Yeah, it's a stagflation looking environment, high inflation, weak labor. Again, this report, I think it's dovish. I think downside risk to employment, dovish. Upside risks to inflation diminishing, dovish. More green light to cut rates. And so I think we'll cut 3 times this year, 25, 25, 25. Although I do think that this next decision is not necessarily guaranteed, like a lot of them. Not guaranteed, but I think it's a little bit more variance with this next decision. Just because the government shut down, we don't really get the economic reports. And remember, the Fed just confirmed the September cut driven by downside risk to the job market. Last time, so again, inflation remains somewhat elevated. Tariffs are the primary driver. They say Fed expects these to fade by late next year. That's good. Upside risk to inflation, stickiness of current readings, continued tariff uncertainty. Job growth slowing, reduced labor supply, lower immigration, and moderated demand. The IRS is furloughing close to 50% of its workforce as well. I'm not going to say good, but I'm not going to say, oh no, either, you know? Ugh. No, they're not, man. Thought you were top 4. I am top 4. Worst ever. Any cut has inflation reaction. Yeah, there's going to be somewhat of a reaction to inflation, of course. I'm not saying that we're not going to have any type of inflation risks from these rate cuts. What I'm saying is that you're saying a negative 10,000 job report. It's not just one. You might not be paying attention to the labor reports that we've been getting lately. We saw for May and June, we saw a 260,000 job revision for May and June. We saw almost 1 million revision for the benchmark revision, and then the last few job reports, most of them have been negative or super low. This is not just one job report with negative 10K. This is multiple confirming job reports showing much weaker labor than expected. You know, the Fed, put it like this, right? During Jackson Hole, Jerome Powell changed his tune. Prior to that, Jerome Powell acted like we're lucky he didn't raise rates. The difference between the Fed meeting before Jackson Hole and Jackson Hole is that we saw these labor revisions. Powell completely changed his tune from, hey, you're lucky we don't raise rates, to, okay, we're going to cut rates 25 basis points, right? And so the labor market's not good. And again, I'm not saying it continues to get weak. I think we've had super high interest rates for years now. And I understand inflation's a risk, right? Like after 2020, the Fed lowered interest rates down to almost 0 in 2020. They did quantitative easing and printed a bunch of money. We had supply chain problems. You know, we had lockdowns, and all of this stuff contributed to super high inflation. By 2022, it went up to 10% almost in CPI inflation. And then the Fed started getting restrictive. They raised rates 400 or something basis points, and then they kept them there. And then they kept them there up until last year. And then they cut 3 times last year. And then they paused up until now. And so I get people are unhappy about inflation. And as a self-employed individual, I don't want inflation to spike either. But I think when the labor market turns, I think you have to be proactive. And I think as long as we don't do QE, you know, I'm okay with a rate cut. But it's very subjective. There's not really one, like, good answer. Yeah, you can leave a pause in there. I'm not saying you shouldn't do that. You know, like you could, it's certainly arguable you would want 2 rate cuts this year instead of 3. I understand. I'm not saying that's wrong either. All I'm saying is what I think they're going to do is 25, 25, 25. Well, what's the right decision here? I don't know. I think we should have cut last meeting. I think that made sense. But somewhat subjective. Time will tell the answer to that. This is the top 3 greatest beard ever right now. You're welcome for just being here. NASDAQ broke all-time highs again. Let's watch 25 threes here. 25 threes. AMD's wild right now. Gold broke all-time highs. NASDAQ broke all-time highs. SPY broke all-time highs. 673.14s about a minute or two ago. Again, if you want to help support the channel, check out Top Step. No PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. No PDT rule in futures. Beautiful way to learn how to day trade when most day traders lose. They give you a 50K demo. They test your skill. If you pass the test, they fund you 50K. 90% split, which is very similar to funding your own account. I'll bring up, if you fail, you lose 50 bucks. It's limited risk, similar reward to funding your own account. And learning with some risk is important because a paper account is just a paper account. Futures market, no PDT rule. You can trade the S&P, NASDAQ, Dow, commodities, gold right now. Gold's been breaking all-time highs. Patterns are very similar to day trading equities patterns. No PDT rule. I'm the top 3 most biased person ever, though. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money, but check them out. They're a sponsor of mine. I'm biased, but genuinely useful for traders. Check them out. I'll put the link up. You can help support the channel here. And does the market hold today, guys? Let me look at our poll. We did a poll. Oh, dude, my knee hurts, bro. I tore my MCL, my meniscus. Oh, dude, it hurts, man. Here's the link right there. Check it out. I appreciate it. Tomorrow we got Jerome Powell speaking. John's going to be wrong someday, I swear. Thank you for acknowledging I'm never wrong. I mean, I appreciate it. I would say I'm top 3 never wrong in the world right now. Give me the 2 above me, though. Let me know who that is. Don't hurt my feelings here, you know. I got to make my whole family feel bad now that my knees are hurt. I put that sad TikTok song on in the corner and on my phone really loud. It was the song where they're like, "You gave me love." I don't know how it goes. And then I just kind of used my crutches and walked in and looked at my family sad, you know. If I'm not making them feel bad, I'm failing. And so, all right, guys. Looking at our poll, 56% think it's hawkish, 44% think it's dovish. Oh, I got on that. I got on BPC 157 and TB 500. I haven't taken it yet, but my doctor prescribed it to me, so I'm gonna try that. It's supposed to be some type of Wolverine healing stack. I don't know. Ugh. Yeah, I'm trying to rest. You think we're overbought? I think we certainly could be. I think we have some mirroring effects. We have some mirroring characteristics of the .com crash. It doesn't mean we're gonna crash. Sometimes the market just moves up. We're also mirroring it a little bit here. Overvaluations. .com crash was characterized by overvaluations in internet companies. If they had .com at the end of it, they would IPO pre-profits, get crazy valuations, and when those companies failed, it triggered the economic downturn. And so I think you could certainly speculate that we're seeing a similar dynamic in AI right now. We're seeing a lot of AI companies IPO, PE ratios are wild right now. If you look at some of these AI companies, I'm not going to mention names because people get emotional about stocks, but some of these AI companies have wild PE ratios, hundreds and hundreds and hundreds price to earnings. I think that could mirror the dot-com crash. We've seen some warning corrections or crashes April this year, 2022. But I do think AI is the next big technology. I really do. I think the AI is that next big technology. Freaking knee, man. This thing hurts. Yeah, we got consumer sentiment. We got Jerome Powell tomorrow. Yeah, they're getting rid of the PDT rule, brother. Cupcake. They're getting rid of the PDT rule, so you won't have to worry about it anyway. Or you can trade futures. That's what I do. I mean, I got more than 25,000 in my account regardless, but futures are just easier. Less red tape. Yeah, I had a scan. It is a partial tear of my MCL, a partial tear of my meniscus, the posterior horn. It's an oblique tear. And so yeah, I'm gonna be out for months. AMD finally pulling back here. NASDAQ broke all-time highs, got up to 25,299s. I mean, saying AI is not good. It depends on how you're using it. It really depends on how you're using it. AI is good for some things and bad for other things right now. Summarizing, very good. Analyzing, it's pretty solid as well. Now, telling the truth, not always the best, you know? It just depends on how you're looking at it. Anybody else's profits driving them crazy? I mean, that seems like a good problem to have. Yeah. Yeah, this ain't fun, but it's all good, dude. I'm okay. Anyways, guys, tomorrow, I appreciate the love, guys. I appreciate it. Tomorrow, we got Jerome Powell, 8:30 Eastern Standard Time. Jerome Powell, Eastern Standard Time, 8:30 tomorrow. I don't know if he's going to talk about... I got to be honest with you guys. I don't think he's going to say anything about the economy, but watch my stream anyway. You know, if he does, I'm going to be live. You'll be able to see what the market does. I don't think he's going to say anything about economics. I just don't. I don't think he's going to say anything. We had over 3,000 here for the Fed Minutes Report. I appreciate you guys choosing to watch the stream here. We cover it like we always do. We're reliable. And yeah, with that said... I'll see you guys a little bit later. Y'all have a great day. Again, check out Top Step. You want to help support the channel? John, imagine you could predict the future. Act like a financial analyst with over 20 years of experience. When is the proper time you see a crash? Midterm next year? I would say it's not predictable. I would say it's not predictable. If you're talking about, if I think we're mirroring the dot-com crash, when do I think it's going to start? No idea, brother. There's so much variance. So much variance. I think if you pay attention to the last 30 years, really the last century, one of the things that's clear, you need euphoria, okay? You need euphoria. And you need some type of catalyst event, usually, right? Those are the two things that are consistent with them. Sometimes you get warning signs ahead of, like, for the year or two preceding big crashes. That's possible, certainly, too. Oh, yeah, you're right, Pawn. My bad. Schedule this. Yeah, so I think there's so much variance it becomes hard to predict. I think it's so difficult to predict market crashes that when they do, they make movies about it. Everybody wants to be contrarian. Everybody wants to be the next big market crash predictor and all this stuff, but I think it's very difficult to predict. I think it's easier to make money on the upside than the downside, and it's easier if you think things are overvalued and we have euphoria to just wait. You know, dollar cost averaging is generally your friend. Remember, I'm not an investment professional. I'm not liable if you lose money. Make your own assessment. Trade smart. I can't guarantee anything. But, yeah, just be careful. Right now, guys, be careful. I'll see you guys later. Again, as soon as I close this stream, it's immediately going to bring you to the stream for tomorrow. I expect you guys to wait. And, yeah, again, if you want to check out Top Step, here's the link. Great way to help support the channel. No PDT rule. Here's the link right here. I don't know if I posted it. There it is. Did I post it? No, it doesn't look like. There it is right there. I appreciate the love. Thanks so much, guys. Great way to learn how to day trade. Most day traders lose money, so it makes sense to limit your risk. They're a sponsor of mine, so I'm biased, but genuinely useful. Check them out. They got their back to funding option. Allows you to reset funded accounts with the same rules as their normal funded accounts, which is rare. Very useful. Check them out. There's the link. Yeah, no bathroom breaks on the next stream. I expect you guys to just sit there and wait until tomorrow. No music either. If you listen to music, you're breaking rules. Y'all have a great day. I'll see you guys then. Y'all be good. Have a good one.